Right guys, so still with the week ahead, but in this video, let's quickly take a look at some of the more idiosyncratic risks that we'll have to navigate in this week. All of these can create some sizable volatility, but keeping track of them and potentially trading them will be a bit of a challenge. So we'll touch on that in a second. I think there's really really four if you think about it, but two main idiosyncratic risks this week. The first one is flow related with the month-end flows coming up. And the other one is political motivated or related with the French snap parliamentary elections coming up on Sunday, of course, and the UK general election scheduled on Thursday. And of course, the Biden-Trump debate coming up later in the week as well. So let's start with the first one, which is month-end flows. Friday is the last official trading day of the month, which means there is often, a lot of rebalancing flows, corporate month-end flows that needs to take place in these next few days. Now, these flows can be very tricky to predict and even trickier to try and exploit and trade. I mean, you would need access to a vast amount of actual real money, equity and FX positioning or exposure data to even try and make a model that's worth trying to exploit. Which of course we don't have, right? And even some of the investment bank models for month end, oftentimes just shows the exact opposite of the actual flows that we can perceive in the market. So what to do with this information then? It just means that you want to be very mindful of any strange flows that might occur, especially in the dollar and some of your other major currencies like the yen, like the euro, like the pound, especially around these last few trading days of the month. If we do spot any, investment bank month-end flow data coming out, we will obviously share that. But it's just worth noting that we have the proclivity for some weird price action taking place, things that might not have any particular bias behind them. It could all be due to month-end flows in a week like this. To make the matter slightly punchier this time round, is that this isn't just a regular month end, it is actually the quarter end as well and half year, which could see slightly larger or even more impactful rebalancing flows taking place. I mean, especially if you consider the amount of one-sided upside that we've had in the likes of US equity futures, it's just, or US equities in general, it's just been absolutely staggering, right? The amount of upside. So seeing a bit of rebalancing flows taking place, it could be very punchy given the fact that it's month end and quarter end and half year. We really need to keep that in mind. Now, there are essentially 2 days we need to keep on the radar. The first one is the official month end or the official last trading day of the month, which of course is Friday. And then we also have corporate month end, which is the last trading day of the month minus 2 days, which signifies the last day for any spot FX transactions that are required for the end of the month to clear, because spot FX trades T-2. In other words, it takes 2 days for those transactions to clear. So Wednesday, corporate month end, and Friday, official month end, could be prone to bigger volatility than usual because of all of that. The bulk of the price action, though, might always normally, especially around month-end related flows, usually takes place in and around the 4 p.m. London time, which is when we get the 4 p.m. London fix. So if you see any strange price action an hour or so and running up into that 4 p.m. UK time this week, it's likely that it might be month-end flow related price action that you're seeing, especially if you see, for example, take a look at the price action today. If you see a day this week where the dollar just tanks or just ramps without any catalyst or reason, it might actually be just month-end flow related. So that's important to keep in mind. In my experience, it's trivial to try and call which way these flows will go. The only way that I've been able to really capture some profits from some of these moves over the years is if there's an asset that I really like, to potentially short, but it rips higher, and I think it's only down to month-end flows, then I could actually use that rip as an opportunity to sell it at better levels. So for example, if I, and vice versa, if I want to buy something, so let's say I really like the euro higher right now for whatever reason, and I see the euro being pushed lower, which I think is only down to month-end flows in a week like this, then the lower it gets pushed throughout the week, I could look at those lower levels as basically opportunities to simply buy it back at better levels. Again, assuming that it's all month-end related flows that we're seeing. So again, in a week like this, the possible idiosyncratic flows from month end, it's a key risk that we need to be aware of. So just keep that in mind if you see that weird price action playing out, throughout the week. Now, the second one that we've got coming up is obviously the French elections, which is due, the snap parliamentary elections, which is due on Sunday. Markets, if we take a look at risk premiums here, looking at the OAT Bund spread, markets have priced in a considerable amount of risk premiums as a result of the political uncertainty associated with this election. Now, the election has two legs. The first vote takes place on Sunday, as you guys know, and then there's a follow-up which takes place, the second vote, which takes place a week after. Now, right now, if we take a look at that polling information again, right now, the polling information shows us that the far-right party, the National Rally, is in the lead at 33%, while Macron's party is sitting at 20%. And one of the big concerns for the market right now is the far-left party, which is sitting at 27% support. Now, between the three, the win on Sunday, that will be seen as the most friendliest outcome possible for EU assets, would be a massive surprise victory, a majority surprise victory for Macron, which seems highly unlikely given the polls. But again, that would be a major upset for both the far right and the far left, and that could see some real gaps to the upside in the likes of the euro as well as European equities. Then the most negative outcome, also unlikely though, but not impossible, would be a far left majority victory. The far left is seen by markets as the most damaging outcome from a fiscal point of view, and that could see a very similar outcome for French bonds as well as the euro to what we saw in gilts and the pound when we had the whole mini budget debacle taking place. That's a real risk that the markets will need to navigate going into Sunday. Again, it's unlikely that that happens, but it's not impossible. The other outcome, which is also more unlikely but not impossible, could be a far right majority victory. They are currently in the lead at 33%, but the markets right now at least don't see them getting an outright majority. What's interesting about this one is that it could be seen as a negative by markets initially, right? But arguably, when you look at the amount of risk premiums, let's go back to that chart. When you look at the amount of risk premiums that's already priced in and built up, and especially if you take a look at implied volatility, let's look at where's those euro pairs. This is just looking at the majors, the euro pairs. Let's quickly open up the euro pairs. They are absolutely crazy at these levels. If you take a look at the amount of uncertainty that's already priced in, I'm of the opinion that yes, a majority far-right victory would be seen as initially negative, but I just feel like so much of that outcome might already be in the price at this stage. If you look at how much is priced into to the spreads and to volatility, it seems like a far-right majority might already be in the price, which means that maybe we don't see as big of a negative reaction on the back of that, right? The most likely outcome, according to the markets, and again, according to the polling information that we've seen, is a hung parliament. Now, there are some investment banks who say that this will also be a negative for the euro and European equities, but I don't know whether I agree with that. Think about it this way. If we have a hung parliament, the worst that could happen is that nothing will happen. Because when you have a hung parliament, you can't enact new policies, right? You can't do what you wanted to do. You're basically you're stuck. So if you're going to be stuck, I don't really see that as a big negative. And again, if you assume how much negatives has already been priced in, I just don't see that as a big negative for the markets at all. That might actually create a little bit of a buy the rumor, sell the fact reaction for the euro. I suppose the biggest risk to that outcome would be that Macron resigns as a result of a hung parliament, which could ignite some new stability concerns, and that could lead to more stress on the risk premium side, and that could lead to more downside for European equities and the euro as a result. But if it's just a hung parliament and he stays on in his role, I don't know whether that would be as big of a negative as what the risk premiums have already priced in at this stage, which again, in my opinion, means that maybe we see a bit of a buy the rumor, sell the fact reaction if we get that hung parliament after all. Again, this week, the progress of how these polls plays out will be critical to watch, especially in line with that OAT bund as well as the BTB bund spreads. That's been a key driver for the dollar, for the euro, for European equities. So that's going to be key focus as an idiosyncratic risk. The other risk we need to start thinking about, especially going into next week, is another election, which of course is the UK election. Now, markets have been pretty quiet about this for the past few weeks, with the Labour victory not really seen as a big negative for UK assets. That's something that, if you were to say Labour is going to win 2 or 3 years ago, it would have been this massive negative thing for the pound. But the markets have taken this in its stride, at least based on the price action that we've seen so far. However, I do think there is a lack of risk premiums priced for the pound right now. Firstly, I think markets are starting to lean more bearish on sterling after the Bank of England last week and that nuanced comments which made it seem like a cut might have actually been possible last week had it not been for the election. Secondly, it's not uncommon for currencies to price in uncertainty via risk premiums going into an election. Even if the election is expected to be good or bad, you kind of have to hedge if you're running pound exposures. Now, even though we have seen a strong push lower in the likes of, let me quickly show you guys, even though we have seen a strong move lower in pound risk reversals, pound dollar risk reversals, let me just quickly pop that on the screen here. Just give me a quick second, guys. I have that here, looking at the historical, here we go. Even though we have recently seen a big push lower in pound dollar risk reversals, the majority of that move that we've seen to the downside has actually been more down to the dollar side of the equation. And that was brought on by the big rise, the blowout that we had in European spreads, not because of the pound or the UK election. So in other words, we haven't really seen any real risk premiums priced so far for the UK election. Now, this might not be a big problem, as markets have been, pretty sanguine about the idea of a Labour victory, as we said. But there is something else brewing in the background, which I don't think is reflected in the risk premiums right now at all. And that potential risk is what the polling data has been showing us about the Reform Party. I mean, let me quickly hide the rest of the ones here. And let me hide the Conservatives as well, because you can't see the number if they are on. If I just hide the Conservatives, take a look at what this poll has been showing us. This party, the Reform UK Party, has seen a lot of uptick. Going from, what was it, close to 13% a couple of weeks ago, 13%, now up to 18%. And take a look at the big drop that we've seen in Labour support. Now, the Reform UK Party is seen by the markets as the most potentially damaging one from a fiscal point of view. It brings back to memory those mini budget as a scenario that we had with gilts and with sterling. It's really something that, the markets, in my opinion, should have focused on a little bit more. And that recent jolt to the upside that we've seen in this YouGov polling intentions, I think that requires bigger risk premiums. I don't think the risk of a bigger than expected win for Reform is currently reflected in risk premiums at all. And if that poll should continue to see upside for Reform and downside for Labour, like we've seen over the last 2 weeks or so, that could start to see markets take the risk a bit more seriously and push the pound lower as a result. Now, I like sterling lower this week. If you take a look at the currency index chart for sterling, we're at levels here where I think there's a lot of ground to lose when it comes to sterling. I do like it lower. And I would expect some additional risk premium softness to start creeping in this week. Unless, of course, month inflows interrupts that, which is, of course, possible. But I'm not betting on that right now. I'm betting on softer price action for sterling as more risk gets priced in ahead of the election. Now, the other election story we need to talk about is the debate scheduled between Trump and Biden, which is said to be a lot of fun a little bit later in the week. I think it will be difficult for either outcome of this debate to be bad for US markets. And I want to stress US markets because, for example, should Biden, pull a rabbit out of the hat and actually manage to compose himself enough to actually win a debate against Trump, which at this stage seems very difficult, especially given how difficult it's been for him to recently cope with some of his public appearances. If he were to pull a rabbit out of the hat, then markets could take that as a positive because it would mean the status quo continues, right? If nothing changes, then the reasons for upside we've seen recently continues as well. If, however, Trump is seen winning the debate, then I think US markets might take that as a positive as well, because he is the more pro-business, more pro-growth candidate between the two. However, that's for US markets. An outright Trump victory in the debate might give us a very good first clue on how other markets outside the US will take a possible Trump victory. Think of things like Chinese equities, things like the antipodean currencies. If Trump should win, by a massive margin, he's already told us that he'll go tougher on trade, as he did with his, more so than he did with his previous presidency. So should he win that debate by a massive margin, it'll be very interesting to see how markets outside the US react. Because remember what happened to Chinese equities, what happened to the antipodeans with that saga. So I think either way, US markets could weather either outcome, I think, okay. But it could be very different for markets outside the US, and we'll need to keep a close eye on how they react to give us a clue as to what is in store for us as we head closer towards the US election later in the year. I am already dreading and lamenting that. I just have no time for the political ping pong that we'll be getting. But it's one of those things. It's, hopefully the markets don't take it too seriously. But, the closer we get, obviously, again, from a risk premium point of view, the markets will start to worry. And again, I think the markets outside the US, a little bit more so than US domestic markets. So that is something just worth keeping on the radar and seeing how those markets react going into and out of that debate a little bit later in the week. So that's just a quick view of your more idiosyncratic risks that we've got coming up this week. As always, any questions, don't hesitate to let me know.